And unclaimed amounts with life insurers have seen a notable decline, dropping to 20,000 crore rupees at the end of financial year 24, down from 22,237 crore rupees at the start of the year. This reduction of nearly 1,000 crore was driven by a 6-month initiative by the Insurance Regulatory and Development Authority of India, the IRDAI, which is an insurance regulator, between June and November of 2023, aiming to address unclaimed insurance and unclaimed fund that lies with insurance companies. Meanwhile, India's overall insurance penetration has also seen a decrease, a not very good sign there, to 3.7% in financial year 24 from 4% in financial year 23. So India's overall insurance penetration is now declining. Life insurance penetration specifically saw a slight drop from 3% to 2.8%, while non-life insurance penetration remained steady at 1%. For comparison, global insurance penetration was significantly higher at 7% in 2023. We're given to understand Gaurang Shah, Senior VP, Geojit Financial Services, joining us live on the show. Gaurang, good to speak to you after a while. Good morning. Let's quickly talk about insurance. We have news coming in there, by the way, of IRDAI, that the unclaimed life insurance has risen. What is your outlook overall for insurance sector going forward? I really want to talk about what lies ahead as far as 2025 is concerned. India continues to be an underinsured country when it comes to, our global peers, where insurance is about, penetration is at about 7%. In India, it's barely 1%.
Yeah, so it's likewise good to speak to you after a long time. Morning to all of you. So, as a brokerage house, we have been positive on both life and non-life general insurance companies. But at the same time, the caveat that we've given for all those who are looking to invest in insurance companies is that you should have a relatively longish time horizon compared to the other sectorial performances. And one of the biggest reason is the point that you highlighted, that India remains underinsured and underpenetrated kind of a country. Yes, we do relate to the fact that post-COVID, the number of people getting insured, I'm talking about insurance, okay, term insurance. I'm not talking about ULIP, because ULIP is not really a product for insurance. So we do believe that there is huge potential, and there is a lot of awareness that has come in post the COVID situation. People have been getting insured, and not only they are getting themselves insured, but they're also insuring for a higher sum. And by the virtue of that higher sum assured, the insurance premium inflows for insurance companies is likely to go up over the next couple of years. The numbers are improving, but it will take a while. So we remain positive on LIC, HDFC Life, ICICI Pru, and SBI Life amongst the life insurance companies. And in non-life general insurance, we are positive on ICICI Lombard. So, it will take a time, because the process is still, the work is in progress. Now, this to translate into a huge positivity as far as numbers is concerned will take a time.
Will take a time. In fact, as far as non-life is concerned, the penetration is just 1%. For life insurance, it's declined to 3.7% in financial year 24. So not so very good news there. But Geojit Financials, of course, positive on life insurance. And a lot of work needs to be done. Gaurang, I want to take you through what's coming out by the way of what is expected from budget. The budget conversations have already started, and we're given to understand our finance ministry will now be focusing on a fiscal deficit, reducing it to about 4.5% of the GDP. One of the thrust areas is going to be quality spending. Is that something that you're expecting from the budget?
So we saw a budget in the month of June, if I'm not mistaken. And 1st Feb will be the date where we'll have the union budget unfold by the Honorable Finance Minister, Srimati Nirmala Sitharamanji. Fiscal prudence has been one of the most core factors and point of focus for the government, and rightly so, the number has been coming down over the last couple of years. It still needs to come down. I think fiscal prudence is something, and at the same time, the Honorable Finance Minister has to do the balancing act as well. Spending on infrastructure, job creation, creating an atmosphere for giving boost to consumption, and focusing on the semi-urban and rural India. I think these are some of the points that have been always on the priority list as far as the government or the Ministry of Finance or Finance Ministry is concerned. Expect this to continue. At the same time, give a little bit of more policy changes for corporate India to perform not only on that domestic level but also at an international level, and to make regulations a little bit more easier to deal with. I think these are some of the priority areas, and of course, infrastructure creation, without which our GDP growth rate is going to, stagger a little bit. And if we are able to do this, my sense is that we can possibly achieve what we are striving for.
All right. Gaurang, over the year, since we're ending the year, consumption has been particularly problematic when it comes to the lower stratas of society. So from FMCG point of view, from, point of view of mass consumption, there's been a problem there. But as far as spending on more expensive items and luxury items and goods is concerned, we've seen an uptick. So that division has continued over the year. I think that is something that the government should also be focusing on, in your opinion, how to really drive mass consumption?
Well, I think the core focus, that's what I mentioned, the core focus is going to be focusing on semi-urban and rural India.
Right.
Because large part of our population depends on agri activity, and, monsoon is agri activity is totally dependent on monsoon. Last year, we had a little bit of erratic monsoon. This year, it was a little bit better than what we saw last time, though it was not as per the predictions of the SkyMet or the Met Department. And whenever you have this kind of a situation, I think spending, contracts a little bit in semi-urban and rural India because of the fact that they are dependent on whatever they grow in their, in terms of crops in the field. We need to see how the finance minister is going to give a boost over there.
Right.
So not only was consumption at a lower level in semi-urban and rural India, but even in metros and tier 2, tier 3 cities, it was at a lower level. This is not only restricted to the basic consumption FMCG sector, but also to the discretionary and non-discretionary kind of consumption spend, likes of autos and consumer durables and gems and jewelry, etc., etc. Though the marriage season is at its highest level right now as we speak. So the precious metal has been showing a decent amount of uptick.
Absolutely. In fact,
FMCG and consumer durable is something that's lagging.
In fact, I want to come to precious metal. While imports of gold have also been at an all-time high in the month of December, gold and silver have glittered through the year, surging past 30%, driven by, of course, a lot of global uncertainty, consumption within India. What's your outlook on gold and silver?
So as a brokerage house, when we talk about portfolio allocation, we also mention that a small portion of your investment has to be in gold related asset class. Now, whether it is in form of pure gold or sovereign bonds, of course, sovereign bonds is a little bit of question mark after what happened. And of course, you have the third alternative in terms of gold ETFs. So gold, while it will perform on its demand and sustainability, silver is something that will also be in equal focus because silver also has a lot of industrial use. So we remain positive on gold as such, and of course, the reports from the international agencies suggest that we are likely to see a steady uptick as far as gold is concerned. A lot depends upon global geopolitical situation as well, because whenever we have an unfortunate global political situation, there is always a flight to safety to gold and the gold prices go up. But gold has been performing over the last 5 to 10 years. The only thing is I would want to advise your viewers, don't compare returns on gold with your returns on equity. Gold will give you returns over a longer period of time, maybe 2 years, 3 years, 5 years. But whenever it gives you return, it tends to multiply by 2. So as far as portfolio allocation is concerned, I think a small part of your allocation should be in gold-related asset class as well.
Right. Since you talked about equity, given the volatility that we've seen in the past couple of weeks, there have been conversations that perhaps gold is a safer option. At this point, do you suggest rearranging the portfolio to weigh in more for gold because of their sustained returns?
It totally depends upon an individual, his or her age, and the kind of risk appetite and time horizon. So, over leveraging to one particular asset class is always not advisable. It totally depends. And like I said, gold doesn't give you return like how equity does. Gold gives you return over a longish kind of a time horizon. So instead of staying inclined more towards gold, I think you should do a balancing act. So, for example, if you ask me, this is just a thumb rule that I can give you. It is not a recommendation. So, if you have say 100 rupees to invest, put 60 rupees in equity-related asset classes, either direct or mutual fund or SIPs. Put 15% into gold or maybe more in case if you have a little bit of more risk appetite. And there is nothing called safer haven. Risk is there anywhere, any asset class. And then whatever balance remains of about 25 or 30 odd percent, you can possibly put it in your PPFs and your bank FDs or maybe something else. So that's the kind of general allocation that I can possibly recommend.
All right, Gaurang, let's talk a little bit about rupee depreciating sharply in the past couple of days. We've seen RBI selling greenback to ensure that there is some sort of support for rupee there, but breaching the 85 against the US dollar mark. Is that worrying for at least, industries which are importing and continue to import dependent industries?
So import-dependent industries, as far as first of all, of course, rupee being where it is against the dollar is our concern. There is definitely nothing that we can ignore over there. But at the same time, dollar has been stronger not only against INR but also against most of the emerging market and developed market currencies. And it is also a problem for US. Having a rather very strong dollar is also not advisable for their economy as well. So possibly the balancing will be there, but till the time that happens, I think we should prepare ourselves for a little bit of more weakness against the in the rupee against the dollar. RBI does step in at times on and off, but that does not really help for a longer time frame. As far as sectors dependent with respect to the dollar rupee situation, it does create a situation for all those companies which are dependent on that kind of a situation. But at the same time, depreciating rupee and appreciating dollar is also positive for IT and pharma.
And this, of course, is also casting a shadow on corporate profits as far as the December quarter is concerned, amid weakening demand across sectors, and adding to the pressure therein overall. Before I let you go, Gaurang, one quick overview on what you're expecting out of 2025 as far as stock markets is concerned, given that earnings and profits are expected to take a beating in December quarter.
Well, so, in our market outlook 2025, we have advised that we should scale down our expectation. As far as Sensex or Nifty returns, that is index returns are concerned, we were used to elevated levels of return in 2021, 22, 23. 24 was a good year from Jan to September, and then from October onwards, we all know what the FIs did. Don't want to go over there because it is history now. So I think a conservative return of between 12 to 15% on the index, that is Sensex and Nifty, is something that we are working on, given the kind of situation and backdrop of events that we have lined up. Inflation, interest rates, and geopolitical situation are three big factors which are affecting global markets. But in case if you are a little bit of more, smart enough to understand, and if you are able to cherry pick, because this 2025 is going to be a year of sector and stock picking. So if you are able to pick those kind of stocks and sectors, I think you can make a little bit better than what the index would deliver.
All right, Gaurang Shah, thank you very much for taking time out for joining us this morning.